Hello, I'm Angeline and welcome to Beat the Street, the show that gives you all the tradable news you need ahead of the Wall Street Open. Coming up, the S&P 500. Can the rally continue this melt up? Traders eye the index with PCE, personal income, and pending home sales data on deck. A consumer health check, American Express sees strong profits for 2024. More on that in just a moment. And the EV slowdown. LG Energy Solution expects temporary slowing of 2024 EV battery demand growth. We'll be checking in on that for you and what it means for the wider sector. Now, a very warm welcome. I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, we do have some of those breaking news trickling through right now. Let's start with the core PCE price index. This is the month-on-month figure for December. We were looking out for 0.2%. We got bang in line with expectations, 0.2% on the year-on-year figure. Expected 3%. We've got slightly just under that, 2.9%. Also, looking out for some of the other details that are still to come through, but a little later on in the day, we'll get pending home sales as well. We have just got the personal income figure out for December, expected 0.3%. That too came in bang in line with expectations. So given that, no surprise really that the just taking a look at Wall Street here, if we may, not a huge amount of reaction there. Also taking a look at the US 500 for you, because as I mentioned earlier, this melt up still remains in play. Of course, those PCE figures does mark or suggest really a durable return in inflation to the Fed's target that it is actually mounting this risk. And speaking of the S&P 500 and the melt up, we've got Axel Rudolph taking a special look at those technicals for you.
Yes, the S&P 500 looks really, really fascinating and continues to rise, did so for all of this week, more or less, and basically hit new record highs above 4,900. And we can see here on the daily chart that we continue to rise. And despite large stocks such as Tesla, for example, disappointing with its earnings, and now Intel as well, but investors seem to be focusing more on the US economy, on a soft landing, on rate cut expectations with regards to the Fed, all of which together with AI-driven companies advancing further pushes the S&P 500 further to the upside. And if we were to take out this week's highs above 4,900, for me, really, the next psychological target area is the 5,000 mark on the S&P 500. And we may well get there. I mean, the trend's your friend. It's still looking good. Yes, we're losing upside momentum and slowing down. But we've had that before when we saw some sort of consolidation phase at the end of December, beginning of January. But as you can see here, we broke out of that triangle formation, and the upside target of that triangle formation is much higher than we're trading at the moment. And yes, we could actually head several hundred, not several hundred, but about 100 points higher with regards to the S&P 500.
Thanks very much, Axel. And as he mentioned, the melt-up continues despite many of the sort of headlines that have been coming through, Intel being one of them. We're checking chip stocks and keeping an eye out on those stocks for you after that dour revenue forecast from Intel. Just having a look at the chart here for you. This is the hourly chart here. Intel expecting adjusted fourth quarter revenue in the range of 12.2 billion to around 13.2 billion. This compares with the analyst average estimate of 14.5 billion. So quite disappointing, really. Intel also forecasting a Q1 profit of 13 cents a share, much lower than the analyst's expectation of 33 cents a share. Perhaps even more worrying, Intel now says it no longer gives full-year financial forecasts. The key thing is AI chips as well. For analysts, 2024 will be a make or break period for Intel. The group has to start delivering solid profits from data centers and all that money it has spent on AI, much like many peers that have also put a lot of money into AI chips and services. Just checking in on American Express now, because American Express just out with earnings, showing you the headline numbers there, sees better than expected profit for 2024, and confounding many of those that were worried about the US consumer. American Express reported record 2023 revenues. Also, to offset those two positive comments, I just want to highlight as well that American Express did raise its loan loss provisions in Q4 to $1.4 billion versus just over $1 billion in the previous period. Just checking in on American Express's shares for you there ahead of the open. All this coming after Visa released earnings and revenues, which were marginally better than forecast in the period overnight. Earnings coming in at $2.41 a share, topping expectations by 7 cents, and revenues coming in at about $8.6 billion. Now, also looking out for Levi Strauss shares at the start of trading this coming session after some poor news from the jeans maker. IGTV's Jeremy Naylor is with us now for more on how to trade the stock. Jerry?
Levi Strauss reported earnings after the closing bell on Thursday. It's not an all-session stock, but we do have an indication as to how it's going to open, and it's not good news. But what I would say is that the company just didn't report earnings last night. It also said that it was cutting something like around about 15% of its corporate workforce to boost efficiencies. Now, this all comes as its costs are rising, and it can't hand those costs on to its customers. It's going to take a hit of between 110 and 120 million dollars. The company also gave an outlook for 2024 that fell short of expectations. The company earned earnings per share of $1.15 to $1.25. It's expecting in the next quarter, and that is below forecast. Let's take a look at the share price chart. There's two things I want to highlight here. First of all is an Elliott wave formation. Here we have the blue lines, the 5 impulse waves that created so perfectly. When you get an Elliott wave, the third line always has to be amongst the longest, which it is, and the fourth must not retrace beyond the high point of the first wave, which indeed it didn't. And then comes the final impulse all the way up to that $17.25 level. And since then, we've seen the corrective wave come through. Now, there's a little bit of a gap that's opened up here. It's a little bit difficult to know where to put this. You could put it there, you could put it there, but I've put it here because I think this leads in nicely to another facet of what's going on with Levi Strauss shares. Now, analysts are suggesting we're going to see a 6%, something like around about 6% drop at the start of today's trade. Now, I've drawn this on here just to give you an example as to what this potentially could well end up now. If we get a candle close around that level, the candle close will then be below this neckline of this head and shoulders pattern here that I've drawn. Now, you measure the height of the head down to the neckline, and you take a copy of that and you project that down from the break. Let's say we get a breakdown here, potentially. Ultimately, we will then end up seeing shares retrace all the way down to the lows we saw back on the 6th of October last year, when the company was finding it difficult to keep up with the increase in price of raw materials like cotton, which is obviously such a big part of its business. Since then, we have seen some improvement, but generally speaking, I think possibly we could well see further lower lows here, especially if we get this 6% loss in shares today. And then I think we then end up with the potential, with a downside of something like around about $12.50 a share for Levi Strauss. I think whichever way you cut it, things looking not particularly good for shares. Shorting the opportunity here, your stop goes above where the B is up here, so you'll stop at around about the $16 level. 15.47 is where the stock will open, and we're looking there potentially for drop taking it all the way down to 14.78.
Thanks very much, Jerry. Lots of red flags there for Levi Strauss. We'll check in with you on those technicals. Now, just checking in on Tesla as well, because what a whopping ride it has seen in the last session. It's looking slightly like it's suggested that it might rebound an early trade. However, we're still quite a way off, well, about an hour from the cash market opening. But we are keeping an eye on that for you after the EV makers value dropped below Eli Lilly and was just above Broadcom on Thursday. Also watching oil for you, because this is a really, really interesting sector at the moment. Lots of moves going on there for multiple reasons. China pressing Iran to rein in the Red Sea Houthi attacks. We've also got US economic data robust, might I add, showing faster than expected growth in Q4. US crude stockpile drawdown also supporting the Brent and WTI picture. Just showing you Brent there, that's the daily chart, and also showing you US crude there, daily chart as well. Now, before we go, just a quick reminder that earlier on we had a US December year-over-year PCE price index showing or suggesting that durable inflation is certainly here. And we also got the month-on-month figure pretty much bang in line with expectations. Until I see you on Monday, have a great weekend. That's it for this edition of Beat the Street, the show that gives you all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @Angeline Ong and @IGCom. This is IGTV.